European stock markets are cautiously higher this morning, with the UK's FTSE 100 index up just 20 points and the EuroStoxx 50 index higher by around about 8 points. In the currency markets, all major FX pairs are pretty stable at the moment. The euro is up around about 132 against the dollar. Commodities are a touch weaker, and peripheral bond yields for Spain and Italy are relatively calm. Good morning, it's Monday. I'm Ishaq Siddiqi and welcome to your daily market bite. It's the start of a new week and the Federal Reserve's policy meeting is pretty much the big focus and the big event for investors this week. So I'll recap what's happened in stocks on Friday, and in Asia overnight we had a pretty disappointing consumer confidence report out from the US market on Friday that sent EuroStoxx lower. At the same time, the IMF cut its 2014 growth forecast for the US economy, so sending the Dow and the S&P lower on the day. That hasn't been the same case for the Asian markets in overnight trade, where we saw a rebound in the Nikkei 225 index. It's moved up above that 13,000 mark, which it fell below a couple of sessions ago on increased volatility. So a nice little rebound in the Nikkei has prompted European markets to kick off on a more brighter note this morning. And going into the session, we don't have much on the Eurozone economic calendar. However, much of the focus will be on the US economic data plate, with the Empire State manufacturing numbers and a NAHB housing market report out later on. Now, like I said, the big focus is on the Federal Reserve's policy meeting, and investors are trying to guess the Fed's stance when it comes to tapering quantitative easing or not tapering quantitative easing, how soon they are looking to do it, and what sort of fashion they're going to look to cut or maintain the pace of quantitative easing in the months ahead. Now, since May the 22nd, when Federal Reserve Chairman Ben Bernanke suggested to investors that the central bank would be prepared to cut the pace of quantitative easing, it sent a shockwave all across markets. We've got the EuroStoxx 50 index off around about 6.5% since then, and global equities since the May 22nd peak are off around about 5%. So investors are very nervous about the Fed's next move. However, really we're just looking for some clarity and information as to what the Fed is going to say, and how the central bank is looking to unwind quantitative easing in the months ahead, if they do intend to do so. Markets are expecting a bit more of a dovish Ben Bernanke, who is likely to suggest that the US economy is in a fragile state. It's a bit of a nascent recovery, as they're saying, and he is likely to comment on the fact that economic data has been pretty mixed on the whole, and that leaves investors very unsure as to what the Fed's going to do next. So until then, markets are expecting to stay very much on the sidelines, with a lot of enthusiasm curbed by the Federal Reserve policy meeting, and it's likely to be extremely volatile up until then. We have some economic data out from the Eurozone tomorrow, which is likely to shake the market. The German ZEW survey is very much likely to be in focus, and then again, the Fed will be pretty much the stealer of the show. Thanks for watching your daily market bite. Tune in for another one tomorrow. Cheers.